Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it FOMO alive and well, because after we've seen what's happened in January and in February, it's clearly that it's alive and well. What am I talking about? Retail investors have added an average of $1.5 billion each day into U.S. equity markets this year, a record-breaking level of inflows. And look at the biggest balloon. See, I thought this was kind of interesting. They show these as a bunch of balloons, and in my mind, getting ready to pop. The biggest one is Tesla, and then the second biggest one is the SPY, and then you can see all the rest in here. Now, that's pretty interesting. We're going to dive in and take a look at the Dow Industrials, the S&P 500, look at a few of my indicators, about 2 or 3 indicators, and then we're going to take a look at Consumer Discretionary, Nike, and Tesla, that biggest balloon. We'll take a look at that stock and see what it looks like. But a couple other things I wanted to share with you. Let's see, the first one is, people are talking about the economy and everybody's like, soft landing, everything's going to be okay. You'll notice the last time it was this high was in May 2008, just a few months before the deepest recession in 80 years. This is something from Deutsche Bank. And here's where we are with the soft landing. Google Trends, the number of search terms for soft landing, and you could see how that compares to what was going on back in 2008. And then we got a little bit of a dose of reality on Friday as we got the Fed's PCE indicator came out, and it was hotter than what was expected. Well, this is kind of interesting. Dreams of a quick Fed pivot have become a nightmare. 7 out of 9 important inflation measures are now higher than a year ago, and they go into all 9 of these, they show them, and then the detail in them. So it hasn't gone away. It isn't really slowing down, and I don't think the Fed is going to either. So we'll see what happens, though. I'm mostly interested in the price action. So let's take a look at the Dow, the S&P, and the NASDAQ 100. The Dow was down 109 points when you round it. The S&P 500 was down 109, and the NASDAQ 100 was down 386. So 1,009, 109, and 386. Now, it's pretty interesting the way the Dow came down here. It is closed below the trading of the last, 2, 4, 6 weeks for sure, very close to 7 and 8 weeks. And I really thought at one point it was going to take out that December low. We'll look at this in more detail in a minute. And I mean closed below the December low. We're very close to that. The S&P 500 closed below the trading of the last 3 weeks. And the NASDAQ 100 close to 3 weeks. It got 2 weeks for sure in terms of the breakdown that occurred. Let's take a look, go back and take a look at the Dow. So here's what happened on Friday. Let's see, down 337 points on the day. So again, here's how we came down. Here's the low of December, 32,573 is where I've got the dashed line, slightly, fractionally below the actual low. So really, really close to taking it out. You can see the bulls kind of fought back a little bit in the afternoon. So we'll see what happens this coming week. But when I take a look at the Elliott wave picture, here's what we've got. I think we're in intermediate wave 3 to the downside. And within intermediate wave 3, where are we? We are looking for the first minor wave 1. Okay, so that's what we're looking at here with the minute waves. You need 5, just like within, the minute waves, you need 5 minuet level waves. Every one of these breaks down into a 5-3 type of structure, right? So to get the first minor wave down, I need 5 minute waves down. Well, we don't have that yet, but here's the path forward. Now, I'm not saying it's going to be to this point by this time or anything else right now. This is just connecting a path forward. We're taking it one wave at a time. We'll see how it develops. Looking to see what else do I want to say about this. I think that's pretty much it. Let's take a look. Let me go back over here. Let me move this up a little bit. Let's take a look at the S&P 500. So the SPX was down 42 points on Friday. The interesting thing when you look at the daily chart in here, it broke below that trend line coming off the October low. So it started to do it on Thursday, came back and closed back above it, but the entire trading range on Friday was below that trend line. So that looks pretty weak to me. We'll see if we continue to get the follow through. We've got a nice little moving average cross to the downside here. Yeah, we got that back here in December. We got a little fake out. It didn't collapse on us. We'll see if we get it this time. You know, when it turned down back over here in August, it was a pretty strong little move. Okay, so that's where we're sitting just from a what I call the moving average view. Let's take a look at the Elliott wave picture. And here's the way we've got it labeled. I've got that we are into intermediate wave 2 or intermediate wave 3 to the downside. That 2 is complete with the high on February 2nd. Now, let's take a look at this. If, you know, the only caution I've got about this, let me go to the SPY because this got a little more detail in it. And this is what you trade to play the S&P 500, right? So let me get rid of the crosshairs for a second. When you look at this right in here, this corrective move right in here, okay? That is bigger than anything that happened in the move coming off the December low, okay? So right in here. So either this is done as an A, B, C, or the only other possibility that could be going on here that I can think of is that this could morph into a double zigzag. But then that would mean that this is a W, X, and a Y. And so we have to have a zigzag like an A, B, C. That's the only other thing that could be going on. Now, a couple of things. Well, first thing I don't like about that is that makes this nice 5-wave looking thing. You have to find a zigzag in there. And yeah, I think you can clearly identify the possibility of a zigzag in here. Okay, I think it counts best the way I've got it. The other thing that we're looking at in here, and again, you know, for the negative or for the positive for this structure, the way I've got it labeled, is the breakdown below the trend line. But here's what we need to see. I need to see this continue to come down. Why do I have 383.08? I've got 383.08 because if we break below 383.08, then all of a sudden this move right here is equal to this move right here. And if we get this larger than this move, it increases the odds that the bear move is underway, okay? And then the other thing that in my mind confirms it is a break below this level, which is the B wave. So to me, here's step 1, here's step 2, and here's step 3. This is what I'm watching for, and this is what we need to see to confirm that this is underway and that we're getting ready to attack the October low down here and take it out, which is exactly what we'll do in intermediate wave 3. Okay, so that's where we're sitting with the Dow and the S&P. Let's take a look at a couple indicators. Okay, the first one I want to look at here is the percent of stocks above their 200-day moving average in the S&P 500. It's sitting at 56.86. So two things. It looks like it is rolling over in here. And the second thing, it's broken this trend line from the October low. So all of a sudden, when you look at this, we have the last 4 days, all 4 days of trading. We only had 4 days this week. 4 days are below that trend line. And that, to me, is kind of a sign that it's in sync with the break that we're seeing in the S&P 500 of its trend line. Now, it's only showing 1 day on the S&P, but I think this is a good sign. We'll see if we get the continuation. Now, that's the 200-day. Let's take a look at the 50-day moving average. We're down here below the 50% level in here. And you'll notice that the actual low in here, let me get my crosshairs back up again. The low on Friday was 37.57%. The exact December low, 37.57%. Kind of amazing that it literally went to the same 1/100th of a point in here on the move down. So, you know, in this line, the reason I've gotten that drawn like this is because this indicator did not confirm the move the S&P 500 made into January and February. Did not confirm it at all. Okay, so that is the picture there. Let's take a quick look at the VIX. And, you know, we got the pop on Tuesday. This little, what I had identified for my members, I don't think I talked about it with you folks, little head and shoulders pattern that developed in here. We had this wedge. We broke out, we pulled back into the wedge, but then it created what looked like a little head and shoulders pattern. And then we got nice move on Tuesday up above that neckline of it. Got to pull back. We'll see if we get the continuation we're looking for. It was up on Friday, but you know, the positive that I'm seeing is this is 1, 2, 3, 4, 5, 6 days in a row, all closing above the 10-day moving average, and it looks like it's wanting to continue pushing. Now, just because we've got that doesn't mean you're not going to get pullbacks. Yes, you are going to get pullbacks, just like what we got on Thursday. So again, looking for the continuation to the upside. That's where we sit with the VIX. The last thing I'll look at today is the on the indicators is the McClellan Summation Index. Now, this is a sum of the McClellan oscillator. Now, the real interesting thing that's going on with this, look how it's pulling right back to this trend line in here. We break this trend line, and I think that's going to be a very strong negative that the selling is taking control in here. And then, of course, the real confirmation of the intense selling is going to be when it breaks below the 0 level here on the summation index. But that's where we sit with this indicator. When we go to the oscillator, we're down here and deeply oversold. When you get below minus 150, which is the dashed line here, you're in deeply oversold, extremely oversold territory. Just like up here, you're extremely overbought. Okay, so we're watching to see what happens here, but I think this is really key right here. Okay, that's it for the indicators. Let's take a look at XLY. Okay, the Consumer Discretionary ETF. Well, it looks like it's rolling over. It was down $2.30 on Friday, down $6.71 for the week. We'll see if we get some continuation in here. The Elliott wave count I've got on this is that we are in intermediate wave 3, and that we are actually in the beginning stages of minor 3 of intermediate wave 3. And when I drill down and take a look at that, I actually think that we are in minute wave 3 of minor 3. So it is going to be real interesting to see if we get the intense selling kick in that I'm looking for, given the stage of the Elliott wave count that I believe that we're in here on XLY. Okay, that is that ETF. And within XLY, here's a couple of stocks. The first one we'll look at is Nike. Let me pull that up. Here's the moving average view of Nike. Here's the daily chart on the right and the weekly on the left. It was down $1.92 on Friday, down $6.80 for the week. So this big blue line is 200-week moving average over here on the weekly. We pulled right back down to it. We may have actually closed below it, 118.29. Yeah, we closed slightly below it. Now it's been below it quite a bit last year, but we popped above it with the move here in January. We'll see if we get the move to the downside that I think we're about to get. We are right at that trend line that I've got drawn here. Let's take a look at the Elliott wave count. I've got intermediate wave 1 and intermediate wave 2, and that we are in the beginning stages of intermediate wave 3. So this is what we're looking at. Here's where we're sitting with the trend line, and this is coming off that October low again. Okay, so this is just like what we're seeing in the S&P and everything else. Okay, that's Nike. Now, let's take a look at Tesla. Okay, Tesla was down $5.19 on Friday and down $11.43 for the week. Now, the interesting thing about Tesla is what looked to me like a big head and shoulders pattern here that it broke down out of, and it actually went almost exactly to the measurement. I know I've got this on semi-log, and I've got it on semi-log because of the degree of range that is sitting here with the price range that it's been in, okay, for what I've got on the chart. Let me zoom in a little bit better and see if I can't adjust this. That didn't help. And let me do this. Let me get that a little bit better. There we go. So, because we're really focused on what happened with the head and shoulders pattern. When we measure from here to here, this came down and got to it almost exactly. And the low in here was 101.81. I was estimating to get to 100. Well, it got really, really close. So here's this, when we talk about this move right here and what's going on with January, February, well, there we go. It's right here, just pulling right back up to that neckline. Now, where do we go from here? It's a little unclear, but when I look at the daily chart, it looks like it's possibly getting ready to roll over. I'm watching this pretty closely. So we'll see what happens. The Elliott wave picture is not completely clear on here to me, so I'm not going to mess with it right now. I'll keep looking at it and seeing if I feel better about what I'm seeing in terms of the Elliott wave picture. But from just a traditional technical analysis and moving average view, etc., and price action, here's the way it looks, and watching to see if Tesla is about to roll over. I mean, it got into that overbought territory here on the RSI and a couple of the other indicators. So that is the picture there. Okay, that is it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll see what happens this week. Everyone, we'll talk to you on the next video.